have them at the beginning, those financial projections. I'm always doing the financial projections at the end. We're working through all of the sections of the business plan, flushing out what we're going to do, how we're going to do it, what our strategic advantages, what our marketing initiatives are, and then we're doing some projections thereon.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for tuning in for another episode of Ask Spurrell CPA. Today, as the Edmonton business consultant, we're talking about the business plan executive summary. Again, as the Edmonton business consultant, we're talking about the business plan executive summary. I have Tyson here with me again.
Hey.
Tyson, you've done a few business plans now. How many do you think you've been in on?
Probably, I don't know, 10?
10?
Yeah.
10 business plans, yeah. You're starting to learn a couple of the ins and outs of different sections that they have, right? So the quote that we have here today is a Benjamin Franklin quote, one of the founding fathers of the United States, and we use it a lot when it comes to business plans, and it says, if you fail to plan, you are planning to fail. Palo Alto has run the numbers for us, and they've come up with the business owners who do a plan are 50% more likely to grow their revenue than business owners who don't do a business plan. And the story that we have here, we have entrepreneurs who are making business plans often don't realize how important the executive summary section is and how much information you can get into it, in a short little area. So Tyson, what are the questions that these business owners should be asking?
Yeah, first, do you start with the executive summary in all your business plans?
100%. Executive summary is section number 1 in each and every business plan. Previously, now, and I would suspect in the future, we're not going to deviate from that strategy. We're always starting section 1, executive summary first.
Okay. Well, some bankers and investors only read the executive summary section.
That's why we always start with it first. So, some people could argue that you should start with the company overview, saying, who the company is, what the year end is, who the shareholders are. But the problem is there's a lot of bankers and potential investors out there who won't read. They're too busy. They won't read anything else other than the executive summary. So if you don't get it in front of them quickly and get the information that you need in it, they might not see anything else. So you want to hit them with that hook, that executive summary that has a little bit of everything and the most important stuff in it right up front.
Okay. Should it include the most important information about the business?
Yeah, you got to have everything you need. You got to write it as if someone is, you need to educate someone on what you're doing. B, give them enough information to make a decision on if this is a worthwhile investment or if you're worthwhile lending risk to them, because that might be your only opportunity to talk to someone, really. These are your opportunity to communicate with someone that you're not going to get to have a one-to-one on at some point. So you got to put everything you need, the most important information about your business, in that executive summary. And you can also use it for yourself. And when you go back and review your business plan, you might not have the opportunity to read all 20, 30 pages of it, but maybe you can go back and brush up on the executive summary when you're busy and make sure, are we on focus? Are we, accomplishing what we set out to do?
All right. Why do you put the problem, vision, and mission at the top?
The problem, vision, and mission, I think, has to go at the top because it really speaks specifically about who you are. People only buy things to solve a problem. Right. Your vision is something that's a long-term goal that you can count, and your mission is the things that you're going to do each and every day if it's written correctly. So if they're written effectively, the problem, vision, and mission are going to really establish a whole heap of information to the other parties. Now, if they're generic babble that a lot of people usually write, then they're not going to contribute anything. If they're eloquent paragraphs that say nothing and they're everything to everyone, it's not really going to be useful. But if they're really succinct statements, they can, give a whole bunch of information very quickly.
What do you include in products, services, and margins section?
So the products and services and margins, I'm really normally going to look at 3 different types of of revenue streams or transaction types of the business. So not everything on the menu, but I'm going to group like items into one revenue stream, and I have no more than 3 groupings normally is useful too. And then we'll give a description on exactly what you're selling, a description of that product and service. And then we're going to talk about what the average transaction price is, so the average revenue for that revenue stream. And then we're going to give a description about what the costs are. Is it subcontractors? Is it cost of materials? We'll talk about what those actual direct costs are, and then we'll give an average transaction cost for each transaction. And then we'll finish it off with the average gross margin per transaction. Like I said, we're normally doing that for no more than 3 revenue streams. We'll group common transactions into a single revenue stream because you don't want to make it too complex. It is a plan.
Okay. Should you have a graphical overview of financial projection in this section?
It's nice. I think it's nice. It's hard to do if you don't have the right software. It's going to take a lot of time. We have software that, is going to generate a little bit of revenue growth and net income of the business, and we're going to put that. So it's not, the really comprehensive information that's in the financial projection, but it's a good overview. It's going to be that eye-catching hook to make them keep reading to the rest of the business plan and the detailed financial projections. So the making it visually based, easy to read at the top in the executive summary is I think it's a good thing to do.
Okay. Do you make these financial projections at the beginning or the end of the process?
Yeah, so even though we have them at the beginning, those financial projections, I'm always doing the financial projections at the end. We're working through all of the sections of the business plan, flushing out what we're going to do, how we're going to do it, what our strategic advantages, what our market initiatives are, and then we're doing some projections thereon. So to do any projections in the executive summary, although I want those high-level projections there, I can't do them until you get to the end of the planning process. Then you do your detailed projections, then you go back to the executive summary and put that overview of the financial projections, in graphical form, easy to read there. So it shows up first, to hook people, but you certainly can't tackle it first when you're actually doing the business plan.
Right. What is included in the market differentiation factors of the executive summary?
So the market differentiation factors, this is really going to drill through what sets you apart from your competitors. So you want to look at the things that you do better. Now there's a list of things people are going to focus on. Some people are going to go after niche industries. Some people are going to have unique qualities and features of their product or service. Some people, have really experienced staff. Some people's businesses have been around for a long time. Some people have, really good payment terms or really effective branding. But in that market differentiation factor, in that executive summary, we're going to establish what those differentiation factors are. And we want to be specific about it. So the key is that, all of these things, there's probably a number of things that you're doing to set yourself aside from your competitors. But you want to boil down which ones are the most important. Which ones are you truly committed to being the best at? Because if you try to be the best at all of them, you'll only be good at some of them. Yeah. You'll only be good. But which ones can you truly be great at? Let's flush which ones those are, and let's put that right in the executive summary, because that really clarifies what sets us apart.
All right. What is included in the target market and the executive summary?
So the target market of the executive summary of most small businesses, it doesn't have to be this, detailed statistical analysis with graphs and charts. It can be as simple as, we're outlining, we're target on the, businesses in the greater Edmonton area, the greater Vancouver area, the greater Calgary area. And maybe we go just a little bit deeper and we're looking at homeowners in that area. Or maybe we're looking at, female homeowners in the greater Edmonton area with household incomes above $100,000. It's really just it's an overview of exactly what we're doing. The problem is a lot of people, they either don't look at that at all, or they go way too detailed into it because they think that they're Pepsi trying to beat Coke, and they need a lot more detail on the subject.
Right. What is included in the financing required section of the executive summary?
The financing required section, we got to be specific on what we're asking for. Are we asking for a credit card? Are we asking for a line of credit? Are we asking for a term loan? Are we asking for a mortgage? If so, what's the mortgage going to finance? What's the cost of the property that's going to finance? And then, we want to know things like what's the interest rate that they were requesting, along with the amortization period or the entire payback period, if you will. Because we don't just want to make asks, but we also want to be specific on those asks, because someone could say, yeah, I'll lend you $1 million, but we're going to lend you $1 million at 15% and you got to pay it back in 5 years. Well, that doesn't matter. They might as well have said no, because you needed something that was at 5% and you had 20 years to pay it back. It's not going to work for the cash flow perspective. So I think it's important to include that financing ask right in the executive summary and be very specific on the ask. So I think that's what we have here today. Thanks so much for tuning in. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And as always, we would enjoy any comments that you have. Please leave them below so we can respond back and use your input for future videos. Thanks very much.